Welcome to the Sirius report. This is Paul, and it's with great pleasure we welcome today Mario, or Maneco64. I'm sure he's very well known to probably just about everyone listening. Obviously, he has his own very successful channel. He's got a profile, obviously, on X as well. And we'll put all his contact details in the description below. So, Mario, normally you're interviewing me, so thank you very much for joining us today. It's a real pleasure.
Yeah, that's right. Thank you for inviting me. And yes, we're at different ends today.
Yeah, well, I think it's good, for me to shut up once in a while, or maybe more than once in a while, and to get people like yourself on who have very interesting perspectives, and you've got a long established profile, and your thoughts are always interesting, and obviously, in as a result of that, obviously, your thoughts generate a lot of debate amongst people, and I think that's extremely important. So, with that in mind, I thought the obvious thing to start giving you, like ourselves, very interested in gold and silver. I thought it'd be good to get your perspective. I know it's a bit of a loaded question or a big question, how you feel and what you think you've been seeing from your perspective with regards to gold and silver markets. I would say in the last 2 or 3 months, it's the turn of the year. And of course, we know there's been not even speculation. We know not just gold, but quite large amounts of silver have been going west to the United States. And it'd be great to get your general perspective on things, what you think is going on. And I would appreciate that.
Yeah, it's difficult to say who's shipping all that gold and silver to the United States. But one thing I would say, uh, if it was like a small or medium size or a group of fund managers, I'm sure the regulators would be on top of it. We've heard from people like StoneX, and they're members of the LBMA. They're saying that over 2,000 tons of gold have physical gold have gone over to the US, not just from London, but from Switzerland and other places in the world. And that's a huge amount. I mean, the supposed U.S. gold reserves, Treasury reserves, are 8,133 tons. So that's like a quarter. So there's a lot of speculation whether the U.S. Treasury is telling the bullion banks to recall all their leases. If that's the case, that they have leases, and many of us, including me, have suspected for over a decade that that's what the bullion banks have been doing. They've been leasing out all this gold. And why do they do that? Well, to keep the gold price under control, to keep the dollar strong, to keep interest rates low. I don't know if you remember back in the 90s, Robert Rubin, the then Secretary of the Treasury under Bill Clinton, he had a strong dollar policy. And many people questioned that. How do you do it? And Bill Murphy from GATA and other people noted that Robert Rubin started at Goldman Sachs at J. Aron, which was the bullion trading department. And yeah, there's a lot of speculation that under Robert Rubin and Larry Summers, who was his deputy, they put through this program of leasing the Treasury's gold via the bullion banks to keep the dollar strong. So maybe that's reversing now, and that's why all this gold is flowing back. Of course, that's just speculation. You could also look at Warren Buffett, the fact that he's got over 300 billion in cash and short-term T-bills. He might be thinking about putting some money, maybe also into silver. Uh, he's had form, so to speak, in buying silver in the past for Berkshire Hathaway. And his father, of course, Howard Buffett, a congressman from Nebraska, was a very pro gold congressman. He wrote that you couldn't have human freedom without gold redeemable money. And I'm sure Warren Buffett knows a thing or two about the monetary system and gold. And I mean, fundamentally, I still hold to the idea that the dollar and all other fiat currencies, they're going to continue to sink, Paul, because as you know, fiat currencies always go to zero. And I've actually been saying that uh, for almost 20 years now, even before I started this channel and I worked in the city. Uh, I was writing a few articles for a blog I had talking about how all fiat currencies are sinking, and I don't see it stopping. I just think that in the last year or so, it kind of has accelerated because we saw a very good year for gold and silver last year, and we're continuing to see the same this year.
Yeah, well, obviously, I would share all those sentiments. I think no one's surprised by me saying that. I think, yeah, there has been speculation as to why gold and silver's been heading west. I mean, from my perspective, and I've said it since 2013, the day the paper markets start to have serious problems, and we start to get somewhere towards price discoveries when the West is effectively drained of gold. Now that doesn't mean literally no gold, but of course, in essence, the what were the problems we're seeing, and it was clearly evidence of physical shortages, and it's had the effect of trying to plug holes clearly somewhere in the West, and it might well be the bullion banks. Then it had that effect is happening, but for a slightly different reason than I anticipated. Although, of course, it has also been as a result of enormous gold and silver flows heading east for over a decade. But I think apart from the issue of gold, which makes sense from a bullion bank perspective, I think the question, and maybe we can drill into this a little bit more, is why is it happening with silver? Because we know central banks don't hold silver. Yes, obviously, silver is a very important industrial metal now. It does have some limited appeal, particularly in the retail sector, which for as a monetary metal. But have you any thoughts as to why it's not only gold where we've seen clearly shortages, and we saw this kind of arbitrage that was effectively set up between London and New York, and okay, there's all the stories about the tariffs, etc. But why is it also, do you think it's to do with silver? Because that is an entirely different market, and it implies there's something else going on that is over and above what we'd have expected to see with regards to the gold market.
Yeah, I think with silver, it's to do a little bit of what is going on with gold in terms of the bricks. I didn't mention that in my first response. I think the United States, especially under the new administration, they realized that BRICS are forming a new block, currency block, and they're using gold. And they just realized, wow, we need to do the same. We need to bring our gold back. So the other thing that's happening, and Secretary of State Rubio even admitted it in an interview with Megyn Kelly, and I was very surprised. He said, we don't live in a unipolar world anymore. It's multipolar. And I think silver, despite the fact that it's not really publicized how important a metal it is and strategic metal it is, not just for industry, but for the military. I think this multipolarity is also waking people up high up in the US or investors to the fact that they need to have physical silver as well. I mean, you can also encourage silver mining in the US and maybe Canada, but at current prices, there's been, I think, very little, how can I say, mining going on. And the biggest producers of silver are countries like Mexico and China, I think. So Mexico is I guess, an ally of the US, but there's a lot going on there in terms of the tariffs. So maybe that's why. And also, maybe the bullion banks, if you look at them, they have huge positions in silver as well, short positions. So if the gold is going to get squeezed, I think they're concerned about silver as well because silver, even though it has been lagging gold, the gold silver ratio is still really high. Eventually, we know, Paul, that in precious metals bull markets, silver always catches up. And the other thing is that there's been a silver deficit, i.e., there's been less silver produced over the last few years than there's uh, there's consumption of silver, and the prices that we have, that we've had in the last few years, they don't really encourage recycling. It's not worth recycling. So I think that's also impacting it. It's finally starting to catch up with the paper game.
Yeah, I think you make extremely important and correct the points there. I think with regards to physical silver, you're absolutely right. It does include the military, but also there's all these new technologies that require silver. And we know for a fact that the Chinese and the Indians have been importing enormous amounts of silver since 2021 through till the end of 2024 and into 2025. It is a strategic metal for the Chinese, definitely. And it is essentially a matter of national security. They don't disclose how much they have. So clearly, from the United States' perspective, because there's this big fear of having commodities and resource shortages, and parts of the US's desire to basically reshore everything, they're starting to look at markets like silver and go, well, we're aware now the Chinese and the Indians have been doing what they are. You're absolutely right. There's physical shortages and there has been for a number of years. So they're starting to look at this situation and go, well, if we want to reshore our manufacturing, if that's a question we can come on to later, then we're going to need things like silver because, yes, we don't produce it domestically effectively. So we need access to that. So therefore, there would be now this drive to start to say we need that physical metal for industrial use, for military use, etc., and new technology. So I think that is absolutely a really important consideration with regards to why silver will move or in the future and why there is this demand for it. And I agree with you. You would expect the ratio between gold and silver to narrow considerably at some point in the future. That remains to be seen when, but I think that explains probably why there is this sudden demand in the United States, because they are starting to realize things they should have been realizing for a number of years, but they were rather asleep at the wheel during the Biden administration. No surprise. But I think the current administration definitely understands better uh, what's going on in that regard. And yes, I think your assessment about bullion banks needing to get back the gold is probably also correct, but we don't know definitively. So, have you got any other thoughts in a broader sense about gold and silver? Any other things you've noted that's happening, maybe internationally?
Well, yeah, in the last 3 years, of course, the central banks, non-Western central banks and some Eastern European central banks have been acquiring a lot of gold. And I don't think they're going to stop. They're going to continue this year. I think if you look at the official gold reserves of the major central banks, the West supposedly still leads in terms of reserves. Like Italy is like number four and Germany number three, even though we don't really know if those numbers are really legitimate. But let's say they are. I think that's what's going to keep happening. A lot of catching up. I saw someone, I forgot who it was, noting that in the late 80s, early 90s, the proportion of gold reserves in terms of forex reserves was like 20 or even 30%. Now it's still really low. So I think that's going to continue as well. And and we haven't even seen yet retail get involved, especially in the West. I think retail is getting more involved in the Far East, like in China. So yeah, that's what I see going forward. It was 2022, 2023, 2024. I mean, even Poland the other day, I think they bought 23 tons in just 1 month. Yeah, I think that's going to continue, and that's going to help keep the gold price going a lot higher.
Yeah, absolutely. And there's increasing evidence, not in all parts of the world, that gold is increasingly being treated as a reserve asset at the expense, obviously, of US treasuries. Another question, I mean, because there's a lot of speculation about this as well, is effectively the idea that the United States is going to reprice gold. Have you got any thoughts about that?
Yeah, the revaluation of the
Yes.
statutory price. Yeah, I spoke about that recently. There's a Bitcoin strategic reserve bill that was represented by Senator Loomis last week. And in that bill, there's a clause where they can revalue the statutory price of gold. And people are saying, oh, they're going to do that and, revalue from $42 and 2/9. That's the official price is 42.222 to, let's say, 3,000. And with the book profit that the Treasury will get from the Fed, they'll buy Bitcoin. But I'm not sure if it's that simple and that smooth because for what about 52 years now that price has been 42.22, uh, and if you and that at the time when they did that, I think the price was around 60. So they revalued from 38 to 42.22. The spot price, the market price was higher, and it's kept stretching from that level. So if you revalue to 3,000, one could argue that some people might think, oh, that's great. The treasury's going to have 800 billion or so extra in cash sent from the Fed, and everything will be fine. But it could be very disruptive, and they could, because you could argue that then, the elastic band would be stretching from 3,000 all the way up, and that the 3,000 level that they revalue it to would now be like a floor. And I think it would continue the disruption, I would say, of the financial system. So, yeah, I think Secretary of the Treasury Bessent recently said that they're not thinking of revaluing, but who knows? That bill, it hasn't been passed yet, but it's been presented. It says if it passes, they will do that. So the question is, what will they revalue it to? They could maybe just revalue it to $1,000, but even then, I think it would be very bullish for gold. Yeah, and bearish for the dollar because if you revalue the price of gold, you're devaluing the dollar. And that's something that a lot of people don't understand, Paul, even economists, mainstream economists.
Yeah, no, absolutely. I mean, I've said this myself in my own podcast, and then we do some YouTube stuff, obviously, myself. And I think if you would effectively put a floor under the price, whether it's 3,000, 2,000, whatever, that is going to have ramifications for the dollar. I think it has ramifications for US treasuries as well. And it's a and you know the argument is, well, if you reprice it to the 3,000, okay, 800 billion, with all due respect, what's 800 billion? I mean, it's like the way the US spends money now, it's kind of rather meaningless. And so I'm not entirely sure they intend doing that. Yes, you are right, Bess. kind of basically said they weren't, but maybe they will in the future. I mean, the bill, I think, was doing the rounds previously. It didn't really get off the ground. There's the executive order, which is supposed to be for this strategic Bitcoin reserve fund. I mean, and it's a bit like, well, we can't buy any if it costs the taxpayer anything. So it's all a bit sort of woolly, not very clear what that even means and how that you could proceed going forward. But obviously, we'll see. Maybe the bill being represented might actually end up being passed at some point in the future. And but then, of course, that's contradictory to their statement because this says, I think, to buy was it 1 million Bitcoin in 5 years or something? My memory serves me right. So we'll see. But yeah, definitely, if you reprice gold, it's going to have broader ramifications. And they've kind of made the point, yeah, they'd like to weaken the dollar, but they want the dollar to stay as a world reserve currency. I mean, there's a lot of, for me, contradictory statements in that, but I think that is kind of contradictory if you start repricing gold or revaluing it to, you know, a figure, whether it's 2,000, 3,000, whatever. So anything else in gold and silver that you'd like to discuss or add?
Well, I would just add that one of the reasons there's been a lot of speculation about revaluing the statutory price is because of all this physical gold flowing to the US. And people would expect, if they're going to revalue it, that they would need to do an audit to show the world that the US is serious about its gold reserves. And the other thing it does, though, it's an admission, I think, of the US that gold is more important, really, than the fiat dollar. That's all I would add.
Yeah, absolutely. It's interesting. Yeah, there's all this speculation about auditing Fort Knox, and I made a post on X earlier going, remember when that was news? Because I'm not saying it won't happen, and I know, I think it's Rand Paul supposed to get a response by the 19th of March, which is in 2 days' time, about visiting, but it's all gone rather quiet. No one seems to be talking about it in the Trump administration, but we'll see what happens with respect to that, I guess, in the fullness of time. So I guess we could move on to another subject, and this again is a huge subject in itself. But have you any thoughts on bond markets, whether that's in the United States or the United Kingdom, or the European Union? And obviously, with respect to, there's been speculation about the bonds. There's obviously ongoing speculation about gilts, and I think I'd heard that there was a suggestion the Bank of England was going to basically leave interest rates where they were. And then, of course, there's an argument, what does the Fed do in the future? Because there's no doubt the Trump administration wants lower interest rate. They've said it publicly. And if you have any thoughts in whatever context about the general perspective on bond markets currently?
Well, looking at it uh, from a free market perspective and cycles, I think the bond secular bull market we had from 1981 to 2020 is over. Um, so I see higher yields and lower bond prices for the last year and a half or two. I guess the bond yields have stabilized. I mean, the 10-year yield got down to around zero point 0.3 in 2020 and got up to above 5, I think, back in late 2023. And now it's at 4.30. So it's kind of stabilized. And uh, we've had another thing that's happened in the bond market, which, in my opinion, is huge in the last few weeks, is Germany. They've kind of gone full Keynesian, in my opinion. The Germans have always been very frugal. Prior to 2020, they used to run budget surpluses, and now they've passed a bill in the Bundestag, I think, yeah, Bundestag, and in the Bundesrat, I guess, that there will be unlimited spending for defense, and there will be like 500 billion for infrastructure. 100 billion of that will be green spending. And I think it's huge because, as you know, the German government bond market is very important. It's the benchmark for the whole of Europe, the UK included. But Again, as I said, in the free market, I'd expect yields to resume going higher, and I think they will to some extent. But like Japan, I think the US and Europe and the UK, they're going to probably adopt some kind of yield curve control, which we know is more and more uh, threat of money printing, which should continue to debase their currencies and help gold and silver and hard assets. So I think that's what they're going to do because even the Japanese bond market now is starting, the yields are starting to take off there. And that's a really bad sign. And they've been, of course, doing loads of QE. So yeah, that's what I see. They're gonna probably have to intervene because if they don't, and yields start rising sharply again, they're gonna have a lot of trouble. That's how I see the bonds. Um, yeah, more and more intervention probably from the central banks. They might even have to resort to QE. They might use one of these exogenous crises as an excuse to to print more, to do even more QE instead of just yield curve control. And yield curve control is different than QE because it sets a target. Let's say the US Treasury will say we won't allow the 10-year yield to go above 5%. So it kind of creates a barrier there. But if the market challenges that level and yields go to like 5.1, they'll have to come in and start buying, i.e., printing money and buying treasury. So that's the main difference. And we could end up seeing the US, Western Europe become more and more like Japan. The excuse me, the central banks owning more and more government bonds. Japan is, as you know, Paul, they've been leading the way not on QE as well for like over 20 years. So that's the problem with fiat currency. When you start inflating, it's really hard to stop.
Yeah, absolutely. And I think the dichotomy for the United States is it's very obvious. Well, however they try to reduce their deficit spending in terms of the budget, one of the big line items is the interest they're paying on the debt. So I mean, if interest rates keep rising, that becomes a big problem for them. They clearly want to lower interest rates. So, I mean, and that's going to put them potentially at sort of loggerheads with the Fed. It remains to be seen what happens in that regard. But I would share your sentiment. The logic is the yields will continue to rise. And that in of itself is going to be an enormous problem. Not least, like you say, with the Germans who've just removed this debt brake and gone, well, all these frugal policy decisions, we have to throw it out the window. And the Bundesbank's not going to be happy with it. Big business is not going to be happy. And at the end of the day, it's just one of those, we know Germany's in serious trouble. And the idea is, well, I know, let's just spend huge amounts of money on military and somehow that's going to reinvigorate the economy. And it absolutely won't, but desperate times and all that. So I would share your sentiment that with regards to what will happen to yields, but they're all then going to have to intervene because in some capacity or other, because they cannot allow yields to rise, not least what it might do, not just to the small regional banks and all the problems we had in the United States as one example, but this could spread to other financial institutions, including hedge funds and ultimately maybe banks themselves, the too big to fail, although they have for a long time had this policy of not wanting to buy bonds, but they may be under enormous pressure to do so. And I've heard rumors they might be in future in the United States, because the belief is, well, who's going to buy all this debt? I mean, and so it's an enormous problem that isn't going to go away. And we had the whole problem in the US with gilts, and sorry, in the United Kingdom. And I think the United Kingdom is always sort of teetering on the edge. It's interesting how yields rose as high as they did when that whole debacle unfolded with when Truss was in briefly in power, in inverted commas, and then, well, why has it not had a problem again? And there are rumors that there are obviously liquidity issues in the banking system as well. So, I think in a general sense, you're spot on in your assertion with regards to the bond markets. So I think an obvious question to move on to, and it's again a bit of a big line item, but for me, it's this question that the United States thinks it can somehow reindustrialize, it can manage its debt, it can deal with everything, and it can implode certain things, and it's all going to somehow come out in the wash and work spectacularly well. And for me, it's, as I've said, and I've done things in the past, that it's mathematically not possible to do things that way. Ultimately, I would agree the US needs to reindustrialize. But have you got any thoughts about the US's kind of and Doge and sort of so its monetary policy, fiscal policy, and how it's going to effectively reindustrialize, how it would like to think it can?
Yeah, Doge, I guess, has come out with some shocking finds. The money that the billions they've spent on USAID and things like that. But I think it's going to be really hard to control spending through Doge because there are parts of the budget that they're not like discretionary. They're like Social Security, Medicare, and the defense by law. Those have to keep going. And I even saw that they passed a continuing resolution, and it was Congressman Thomas Massey who voted against it. And he said, well, this is uh, Joe Biden's continuing resolution. He said it's going to add almost 300 billion to the deficit this year, 250 or so the next year, and 200 the year after. So yeah, Doge is kind of yeah, it is having an impact on the bureaucracy, but I think it will be limited in terms of controlling fiscal spending and the deficit. I saw that Elon Musk posted the other day that the interest on the debt, the federal debt is, or national debt is $1.2 trillion, and it's more than they spend on defense. And he said, hopefully we're going to fix that. But yeah, that's a good intention, but the I'm not sure if you can fix something like that. It's all about maths because once interest on the debt starts surging like that, and unless yeah, yeah, unless you cut the size of government and you cut spending, which is something we're not seeing. We also saw that the Republican Congress presented a proposal where the budget cuts taxes by like 4 trillion, but only cuts spending by 2 trillion. So it doesn't kind of add up. The other part of the question is about reindustrializing the United States. Well, I think it's possible to do it, but it's going to be a very painful process. It's like taking a drug addict or an alcoholic who's been um, had the problem for years and putting him or her back in shape. It will take time and it will be really tough. I think the people who are gonna really not benefit from, or the institutions that are not gonna benefit, Paul, are the big U.S. multinational corporations because they've done really well from globalization and outsourcing a lot of their production and selling their cheap goods back to the U.S. So what's going to happen is that, and maybe that's why the stock market has been under pressure. A lot of these companies, they're going to have to go back to the U.S. and employ Americans, and their skills aren't as good as they used to be. And despite that, they're going to be more expensive than the labor elsewhere. So, yeah, I think it's possible to do that. And I think actually, uh, I have to give President Trump credit for trying it because I think he realizes if it's not done, eventually everything will implode because you can't keep just an economy, keep borrowing to buy stuff from abroad. Eventually, you're going to go broke. So you have to somehow do something about it. And I think all these tariff wars and these games back and forth is to try to discourage American companies from going abroad. Maybe that's what he's trying to do. If you want stable environment of production, come home. Don't stay abroad because I'm going to slap tariff on your products. So that's how I see it. I mean, if Kamala Harris had won, nothing of this would have happened, and we would have kept going on with the old system. Um, and even though, like you said, Trump wants lower interest rates, on the if we had had another administration, they would have wanted lower interest rates as well, but to keep the speculation, and Wall Street happy. And I have a feeling, even listening to Scott Bessent, the Treasury Secretary, who was a Wall Street guy, saying, we need to look after the real economy too. It's not just all about Wall Street. So it might maybe he's trying to trick people. I don't know, but that's how I see it.
Yeah, have you got any sort of thought as to how you think this whole tariff war is going to play out? And because it's just something for me that's in, it's not sustainable. There's going to come a point when there's going to be a huge problem. And yes, you're right. You might want to encourage US companies to manufacture in the US and not outsource it, whether it's China, Vietnam, or anywhere else. But even then, given the sort of cost of living matrix, now it's still going to cost more to manufacture inside the US than it's going to cost to manufacture it somewhere else and pay, the US to pay tariffs on top. But setting that aside, have you got any sort of broader thoughts as to how you think this whole tariff war is going to play out?
Well, I don't think it's gonna get better in the short term, maybe not even the medium term. And what it might lead to is more and more um separation, let's say, of the BRICS bloc from the US, because they're going to say we can't really depend on exporting to the US anymore. And I've seen that China, they're looking to infuse or pump up, consumption in their economy. I think they still have, they've got 1.4 billion people, and consumption is relatively low in percentage terms compared to like the US or the UK. So I think that's what's going to happen, and the US is going to become more and more, I guess, isolated. But maybe that's what they want. They want to focus on the Western Hemisphere, on the Monroe Doctrine. They want to get away from you know, being too exposed to the whole world. As for what other impacts it could have, I think it will make everything more expensive and more difficult to get. The supply chains are going to be more and more like jeopardized, pretty much like we had during COVID. So yeah, that's the kind of impact I see. It's really difficult though to know exactly, Paul, unless I could get President Trump on an interview and ask him exactly,
No.
what his final objective is. But yeah, so there you go.
Yeah, of course, you're absolutely right. But it's good, to get some sort of perspective or thoughts as to how you think things will play. And I do think you will get an increase in costs for sure. It's a statement of the obvious in the sense that, as I say, if a widget costs $1 and now a widget costs $1.30, well, someone's going to have to pay the cost and of that increase. And as was seen from in 2018, 2019, in the United States, the vast bulk of all the tariffs was paid by the end consumer, or whoever imports commodities were paying it. Ultimately, you get producer price inflation or the secondary CPI. Another question, because I kind of posed this question on my own YouTube channel and regarding this idea, because there's been noises where the US was coming out going, well, in 6 to 12 months, it'll be a Trump economy. And until then, it's still a Biden economy, and almost kind of inferring, well, if we had some sort of market correction, well, it's not really a problem. And, but maybe a market correction isn't the market blows up, because trying to allow a correction based on how markets have operated since 2008 is very risky. So I wondered if you had any thoughts as to, I'm not talking about, sorry, and you have to be careful talking about engineering a crisis as well, because that's just not something you can control. But do you think they might be happy to say, well, let's get some of the pain out of the way before everyone starts saying this is a Trump economy and we're responsible? We can just blame it on Biden, and then we can hopefully maneuver through this, which is risky, and then we can implement our policy decisions we think are going to work in the future.
Yeah, I definitely think that they're not bothered whether there is some kind of correction or recession early on in the administration, because then uh, technically or historically, the economy is supposed to rebound a year and a half or two after that, I guess, just in time for the next elections. Um, but you never know. What if it's like an environment like in the early 30s where the correction never comes? So that's a big risk they're taking, to think that everything will be okay after 6 month recession, everything will pick up. Because don't forget, Paul, we've had, this is like an everything bubble that's been blowing. People have been blowing it since 1981. Greenspan was the guy who started in 87, not allowing for the markets to correct fully. He intervened after that crash in October 87. He intervened massively. He intervened to save LTCM in 98, and then he cut rates to almost, I think, 1% after the dot-com bubble, and then he built the helped build or inflate the real estate bubble. And then when that burst, they threw everything at it again, and basically started inflating the everything bubble 2020. Uh, yeah, they threw even more at it, and here we are. So if there is a correction, um, yeah, and I know Besson said, I've been in the markets for 35 years and corrections are healthy, but when it's such a big bubble, um, be careful what you wish for. That's all I will say. It might take more than 6 months to see a new Trump economy.
Yeah, absolutely. And it could take even longer than that. It could,
Well, more like 6 years.
yes, and it could be, yeah, and if this carries on into the midterms, then he risks, well, in inverted commas, being a lame duck president because policy decisions aren't playing out. Just a kind of final observation on the US, which leads into a question. there's no doubt when Trump was elected, it was very different from 2016, where Wall Street embraced him. And they embraced him because they heard all these kind of Reaganomics terms like deregulation. I mean, and it's not just deregulation in the financial sector, but that's part of it, which I think is extremely concerning. And I've heard noises coming out of people who are very worried as to what that means. Now, have you any perspective on that? And of course, that then ties in with if you think you're going to allow markets to deflate to some extent or some sort of correction in inverted commas, how Wall Street's going to perceive that and what the damage it might do to them. And then it's all well and good saying here's deregulation, but I was terribly sorry we've just blown up the markets to some extent. So do you have any thoughts on that?
Is that the deregulation of financial markets, right?
Yes, yeah, I
Yeah,
mean it's
yeah.
yes, yeah.
I read a few months ago that the private equity market, I think it was Judge Scalia's son. Apparently, he's very close to Trump. He's trying to and he's a lawyer or attorney, and he's trying to push deregulation for private equity so that the public, and their 401ks and their pension, they can invest in private equity. And I think that's very dangerous because I've always thought of private equity and hedge funds. They used to say you need to be an accredited investor, have, if enough money that you can lose to risk your money and yeah and I think the reason that's happening for private equities is because I think there's a lot of trouble brewing under the surface and private equities they're in trouble I think because it's a very illiquid market because you can't really buy and sell easily as in the public market so I think it's really dangerous. But I haven't looked into it recently whether this push for deregulating private equity is succeeding. But yeah, I would keep an eye on that. I mean, I'm all for free markets, but we've had regulation, Paul, for so long. I think regulation really uh, started after the crash of 29 with the Great Depression. They created all these agencies, and people have become so dependent on regulators. They tell themselves, "Oh, it's regulated by the CFTC or SEC or the banking regulator. So it must be fine. And people don't do their homeworks anymore. That's the only reason why I'm concerned about it. But because in a perfect world of free market, the market should regulate things. I think Greenspan had that same philosophy. But when you've been pampering people and holding their hands for so long, and then all of a sudden you don't hold their hands anymore, they're gonna be in trouble. So that's what I would say about that.
Yes, I would agree, and most certainly. So another point, and is maybe straying to some geopolitics, and that relates to a lot of ongoing concerns that there's this schism developing between the United States and Europe. And I think there's enough evidence to suggest it's happening. To what extent that eventually plays out remains to be seen. So, and that obviously has potentially very broad and serious ramifications. So, do you have any thoughts on that relationship, which we know what it's been? I mean, absolutely, Europe's a vassal of the United States, and the European Union is full of Atlanticists who've been in the back pocket of the United States for a long time. But the Trump administration's come in and thrown this enormous spanner in that works. And all of a sudden, Europe keeps making the same noises like nothing's changed without realizing clearly things are changing. So, any thoughts on that?
I would say it's really positive that Trump wants to allow Europe basically to be on its own. I mean, I think that would be great, but unfortunately, the leaders we have in Europe, they seem to be taking all the wrong decisions, and I they want to keep uh, alienating the Russians in Ukraine instead of um going for peace. They keep saying that Russia is a threat, and some people might not agree with me, but I don't think Russia wants to. They already have such a huge territory. They already have difficulty enough with the country they have. I don't see why they'd want to come to Europe and take over Europe. So yeah, I think it's positive, but just the Europeans are not. They're not like taking the positives, which I think um, you could have with the U.S. I mean, it's about time. I think the U.S. Withdrew all its troops from Europe. It's been here since the end of World War II, and uh, the Soviet Union collapsed in the early 90s. Um, I really don't. I think NATO's been here for too long, and I think Trump is right. But I think one of the countries that loses out a lot on that is the UK. For some reason, the establishment here still thinks that they need to run things. They still believe in this Mackinder theory that you have if you allow uh, Eurasia to be under the control of Russia or Germany, that you can't run the world. And I think that's the reason why we're seeing Starmer be so belligerent and not really trying to cooperate with Trump and Putin. If I was a Starmer, I'd be sitting down with Trump and Putin and trying to solve that problem, in the Ukraine. And I think the reason he's not doing it because he's got big people behind the scenes here in the UK who want to make sure that Eurasia, or the world island, as Mackinder called it, is not doesn't go away from the control of the UK and the US. And I think Trump doesn't want to have anything to do with it because, as Marco Rubio said, the world is a multipolar world. So the US will take care of the Western Hemisphere. Europe should take care of Europe. And then, Russia takes care of Russia, and China takes care of China and the Far East. So I think it's positive what Trump is doing. But the problem is that the Europeans, I think, are going about it yeah, completely wrong way. Yeah.
Yeah, absolutely. I mean, but it's for me as well, it's a bit of a hangover. I call it the Cold War PTSD for a lot of those former Soviet occupied countries who still think, that Russia wants to invade and conquer them again and have the Soviet Union 2.0. So that's as much as anything part of a huge problem that is currently intractable. And yeah, the UK has this very strange, bizarre relationship with respect to Russia going back a very long time. But I mean, I think that's also raises an interesting question. I mean, at this point, it's difficult to ascertain precisely how it will play out, but the idea of US Russia rapprochement, do you have any thoughts as to what you think that might mean in practical terms and what the ramifications of doing that might be in a broader sense, say from the United Kingdom and say Europe's perspective?
Yeah, I think for the US, it's a good thing. I think even President Putin said a few weeks ago that they're willing to accept investment in the resource sector. I mean, Russia is a very rich country in resources. Some people say, I'm not changing the subject, I'm just saying that, like, some people have said in the last decade or so that the business of China is business and the business of the US is war. So, rapprochement between the US and Russia would be good to do business. Uh, and as far as Europe is concerned, I think they need to do the same thing with Russia. They need to work closely and trade with them. I mean, West Germany, prior to the reunification of Germany, they used to buy their gas from the Soviet Union, and at that time there was a Cold War and an Iron Curtain, and now that's all gone, and they're creating a problem, in my opinion, where there isn't one. So. That's the way I see it, Paul.
Yeah, absolutely. I totally agree. I mean, any sort of thoughts on US-China relations going forward? We know, obviously, there's the thorny issue of Taiwan, which kind of, I wouldn't call it simmers, but just keeps kind of, it's there on the horizon. And also, of course, there's the sort of tariff war, which failed in the first Trump administration with China. And so, any thoughts on what may transpire between those two nations in terms of relations, and obviously how that, I guess, would also feed into this reindustrialization, given, of course, the US, in its infinite wisdom, and decided to export its industrial base to China, and the rest kind of history.
Yeah, maybe Trump has realized that the opening up to China, yeah, it was good for the world, I would say, generally speaking, because China was a basket case 45 years ago, and now it's a really wealthy country, I would say.
Mm-hmm.
But I think the US sees China more as an economic challenge. I guess there's always the Taiwan question, but even the US recognizes Taiwan, um, doesn't recognize Taiwan as an independent nation. I think from what I've read and studied in the past, they still have a one nation policy, even though they seem to want to provoke the Chinese quite a bit. Yeah, it's difficult to say. I think the Chinese, some people might think it's naive, but I think all the Chinese want to do is compete economically, and they're good at it. They've done really well. Education there is really good. Um, yeah, and they've lifted hundreds of millions of people out of poverty, and now, yeah, like you said, U.S. exported all its industry, or a lot of its industry, to China, and now, it was able to borrow and buy from them. But now we are at the end of the road. So, yeah, there is a danger, though, that this could be used as an excuse for some kind of conflict. I hope it doesn't happen. I hope a lot of the bluster that comes out of President Trump is just that, in order to try to get better deals. And I think it might be. So, because I don't, from what I hear, even though recently they bombed the Houthis in Yemen, I don't think he really wants to be at war with any other, with great powers. So that's my hope with China, that it becomes also more of a commercial and trading and investment relationship.
Yeah, no, I'd agree. So maybe a final question, and then we'll come back to some sort of more financial stuff. Have you any sort of, well, I'm sure you do, have thoughts about the future of the dollar? I mean, we know the dollar has been a world reserve currency. This is irrefutable, but it's very clear that it is not a world reserve currency now that it was in the past. Have you any sort of broader thoughts as to where you think we might be going in the future? Or, whatever sort of time scale you think's appropriate.
Well, yeah, I think the dollar is probably going to go the way of the British pound, and after World War One, or even World War Two, and it's going to take a while, I guess. Or I think when Bretton Woods was agreed upon in 1944, it took 10 years for forex reserves in sterling to go below US dollar reserves. So it took 10 years for the dollar to be more dominant than sterling. But what I see in the future is gold becoming more important as a reserve asset for all currencies, and the dollar just being one of the major currencies with the other major currencies like the yuan and the euro. And yeah, those would be the major three currency blocks that I see evolving forward. Even though the euro, I would say, I would put an asterisk next to that because I think there's a lot of unhappiness in this European Union project. You, we saw recently they've canceled elections and or they canceled they canceled the elections and they banned a guy from the guy who won the election from running again in Romania. And we see like people like Orban in Hungary very unhappy with the EU. So but yeah, I think the euro will keep going, even though there's that danger. So I see the dollar is still being important, but becoming, less important. I mean, I don't think it's going to be as unimportant as the as pound sterling. I think we still people still have like 4 to 5% of foreign exchange reserves in sterling. I don't see it going down that much for the dollar, but we could see it down to like let's say 33% and 33% China and 33% euro, something like that.
Yeah, I mean, this is kind of a bit speculative because there's no indication of a BRICS currency as people have perceived it to be in the future. But I think as multipolarity uh, garners much more interest and grows, then I think the likelihood of some sort of currency union existing, and there's rumors and discussions going on in parts of the world like Africa, and people will say that will never happen. Well, at some point, it probably will. We'll see what happens with BRICS, but obviously, have you any thoughts on, I mean, as to whether you feel those things are a realistic proposition, whether it's in the next 5 years or decade or whatever? And obviously, clearly, if that happens, then that's going to have an impact on the uptake and usage of the dollar in the process.
Yeah, I'd like to correct something I said. So the reserves, I think, will become not 33, 33, 33, but more like, let's say, we could see half of the reserves in fiat currencies and the other half be gold. And I think BRICS is gonna keep moving forward, and I think Africa will probably be aligning itself more closely to the BRICS, especially with what we're seeing now between the US and South Africa. Yeah, for some reason, the African countries have yeah, they're leaning more towards BRICS. So that's how I see it. Yeah, and the dollar, but yeah, the dollar will still be important, I guess, especially if Trump is kicks off this reindustrialization. They might start actually exporting real things and earning their way around the world. That's the other thing Trump doesn't say. Yes, some countries don't have higher tariffs than the US has, but the US has had this exorbitant privilege for uh, over 50 years of being able just to print the dollar and buy things with money out of thin air.
Yeah, sure. And just a final point on currencies um, and the ruble. The reason I mention it, we know absolutely Russia has an enormous resource base and it's hardly tapped it in. It's probably 70% of its resource base it's never exploited. It's obviously has food security as well, so it's resources and commodities across the board. Now, obviously, I know currently, as you know, that there is enormous sanctions on Russia, but at some point, and we're starting to hear noises, even coming out of NATO, which is US control, at some point we'll have to have rapprochement with the Russians. This, the Cold War associated with the Ukraine war will come to an end, and it will do. So obviously it works on the proviso that happens. Do you have any feeling as to how the ruble may play out in the future in terms of its uptake? I know it already does with the Eurasian Economic Union countries, as an example, and between China and Russia, but any thoughts as to what may pan out in the future for the ruble?
Yeah, I mean, they have a lot of gold, the Russians, so I think the ruble will stay a relatively important currency. I think they still, because of the war, they've had quite a bit of inflation. But yeah, and especially if the US tries to work more closely with Russia. I saw an article today in the FT. I didn't read it, but I saw the headline that hedge funds and Western investors are looking to going back into the Russian market. I remember, 10, 15 years ago, it was really fashionable to invest in Russian bonds and corporate bonds, and so I think that could come back. Maybe not from a European perspective, but maybe more from an American perspective. Yeah, and it would be important though that the West unfroze and gave back those $300 billion or so that they've taken from the Russians, because if the West or the US expect Russia to deal with it, they need to be able to trust it.
Yeah, absolutely. Well, Mario, thank you very much for joining us today. It's been a real pleasure. I enjoy your insights and your thoughts. I watch your YouTube channel as well, of course. So thank you very much for coming on. We really appreciate it.
You're welcome, Paul, and thank you for having me on.
It's a real pleasure. So we'll put all Mario's contact details in the description, so you can go and check his channel out. I'm assuming probably most of you already do anyway. And with that, we'll obviously say goodbye. Please, obviously, like, share, subscribe our channel. It's doing pretty well in the few months we've been going. And, we'd like to grow it. So please help and support us as well in the process. And with that, I'll say goodbye.